Hi, everyone. Today is Friday, February the 28th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and we have got, I think, something pretty interesting here. We've got the personal income and outlays and the Chicago PMI. I don't know how much the Chicago PMI is going to do anything, but personal income and outlays going to be pretty important. All right, so here is what we are looking at. Yesterday, we absolutely rejected prior day's highs really dramatically. Here's the interesting thing. Open interest every day this week in the settlements has been bullish. So traders have been trying to position themselves to go long in the pre-market, but almost every single day by about 8:30 Eastern, they start inventory correction, and it continues. And so today looks no different. Let's take this and move it here. Here's the bottom of the range, right? Yesterday's candlestick formation. Could we get to 59.45? That's the low of Wednesday, potentially. As we look here at, again, this is the E-Mini S&P 500. The line in the sand is 59.41. Now, I suspect that income outlays, personal income and outlays, are going to be pretty important for us to see market reaction. But if it's been like every other day, what we'll see is inventory moving up and then a complete collapse of price action to head lower. So if we head lower, I'm going to reverse that Fibonacci. If we head lower, we're looking at the VWAP for the range, which is 58.24 and 58.01. Here's the thing, 58.24, big, hairy deal. Take a look at this range of motion. We are officially negative on the year. So they're going to try and break this number back. So see this candlestick right here? This is January 2nd. People went long. And if they're holding it on the swing, then they're going to bump into some problems if it can't hold the low of the opening candlestick formation. And so what has it already done? It already broke lower, okay? Already broke lower, but they're recovering it. So what the chart is telling us is that traders are still trying to buy the bottom. They want the year to be green, but every time they've bounced, it's been rotating over, and this is the 200. Simple moving average underneath. This is the 50. We'll see what happens. So if, per happenstance, we get another liquidation break, let's take a look at what happens there. See this range here? Kind of important. Old resistance, new support. You can see the traders are desperate to try to hold this 58.60. So if we lose it a little bit today because we have another violent sell-off, probably a good idea to note that a bounce action there might be on the horizon. Very interesting. Not sure what we're going to get today. I suspect we're going to get something, but I don't know what. So let's use the lower line for kicks. So we can just have one of these, and I will redraw that Fibonacci. I do not remember its direction. Oh, crudsicles. All right. All right, so the goal, 59.41. Are traders going to try and do that? Yeah, I do. I think it's going to be, people are going to think, hey, this might actually rotate over and we'll get ourselves a real puke. And then it might not. So you want to be super careful today. Small size, very small size, and wait for your setup. Just wait for it. Well, what might it be, right? Let's take a look at the NQ and talk about how a setup might unfold here, okay? Big line, 50. Everybody watches it. It's broken. Fulfillment, they just keep selling it down. Every single morning, I look at settlement. It shows positive open interest. It tells me that traders are positioning for bounce action, and then they can't hold above the regions, and liquidation begins. And that's what they've got. Here is the 200 at 21,336 for the NQ. Very close to where the actual price action has a wick. And so we can see that looks bearish. Also, very interestingly, it's trying to bounce, like the ES is trying to bounce, but not having success staying up over the close of the prior day. That's pretty important. All right, very big liquidation. Let's reverse this so that it looks, and we can see the numbers. Where's the go, no-go line here for buyers and sellers? Well, I think the sellers are going to try and test lower, but not without the bounce. So this is a sell the bounce event since we got it underneath the 50. The goal is the traders will try to recover the 50. Last time we spent time under the 50, 1, 2, 3 days. On the fourth day it bounced. Here we've been under the 50, 1, 2, 3, 4. Could this be a fifth day? I don't know. Looks like it. Here is the opening candlestick of the year. We are well below it, right? 20,983. Now, we know that these charts can move 700 points at a time, so it's not, we could have it. The problem is any of the bounces have been continuously sold, and it's rotation. So now the big question is, how do people feel about, is this sort of a great big sell-off? Is this, I have to tell you, no. This is very organized selling. There's rotation in the market because there are bids that are being made in other spaces. They're places that held pretty positive motion, right? Let me take you to my Not Your Investment Advisor guy. Here's the show notes. Let's go here. And what he said was 35 advancing, 61% declining, 119 new highs, 348 new lows. As a market veteran, I can tell you, if things get nasty, you have like 26 of those, okay? Sometimes 5. So we are still rotating, and we're coming into a big cycle event, February and March, OPEX, very volatile. These very deep dips, people are going to buy them. And although, there's the narrative that the administration only cares about what the stock market is doing, that's not true. They want to bring down interest rates. And they said weeks ago, listen, we're going to do it with or without you. And so, to be sure, there's a bigger plan on the horizon. So stay tuned. All right? Now, boy, I took too long for that. Where should support be? It could be down here at value area low here in the NQ. That's 19,752. Do you see the range we're in? 22,100 to 20,400. Let's just round that. We could easily see a 2,000 point drop from this area if we were trading the range. I draw the box easily, but there are going to be buyers underneath. It's just about being patient if you're thinking about going long, and then what to do if you're thinking about going short. All right? Whew. Sorry. I could barely sleep last night. I was thinking about the market so much. It was insane. I know I'm a lunatic. So this is very interesting. As we move to the YM, normally we're up thinking about the market if we've got positions going against us. I'm just up thinking about the market going, oh, okay, what if this happens? How do we do that? What are we going to do here if this happens? Okay, so look at the battleground we're facing. This big candlestick formation I positioned here simply because it was the widest angle candle, and the goal was, can we stay above 43,400, right? Guess what? We couldn't, but we held the low, this range right here, haven't adjusted the number, 43,326. We gapped below it and then bounced. So what has price action been doing? Where's the 50? Well, the 50 is flat and right here. So it doesn't have trend in the Dow, in this Dow chart. It's flat. And so it could suggest that bounce action is on the horizon. Hang on, let me close this short. Okay. We could have bounce action on the horizon. Okay. And that means we could go all the way to 43,961. Bounce right back up and come right back down. It really depends. I have no idea how they want to defend it, but I will say this. Bounces to the upside, big bounces, they're going to be met with sellers. No doubt about it. No doubt about it. That's my estimation there. So, what do you want to do? Short the bounces. Okay, Emery, where is that? If we cannot hold over the open of yesterday's candlestick, and let's say that's 43,500, where we're coming into right about now, price action is going to send us down. Wait for the edges of the formations and the congestion of candlesticks to initiate your trade. If this moves past 43,500, we could move all the way to 43,900. Don't continue to add to a short if the market all of a sudden takes a turn, because there are a lot of people that are very, very short. Okay? And you could get caught going down the fire escape. Be very careful. Small size today. Small size. Let's take a look at Bitcoin. This should be bouncing, yeah? Oh, look at that. Well, it's holding off the edge of its bounce, walking the Keltner band, but look at the slope of this Keltner band. See? Upside, downward slope, downside, downward slope. That means all the bounces are sell zones. All the bounces are sell zones. Where's it going? I mentioned down here, 72, 70, maybe even 68. How do we want to trade that? I don't know. I would say wait for the bounce into prior congestion and breakdown and consider a sell there. You know, it is trying to frame a bottom. There are a lot of people trying to get long Bitcoin because they think this is the hold zone. Not even close. I do think it's got another 20,000 to the downside, easily. And then it'll gain traction again. Oh, shucks. I closed my short too early. Okay. Yeah. So that's it. What we're looking there, 80,000 likely to be resistance. If it breaks above 80,000, 83,500 might be the next place. So you can have a look there. Let's take a look at oil. Oil, coming back. Take a look at the dailies. You can still, wow, this is sitting in such a tight range. Okay, remove this fib. So look at this formation. Somebody said, hey, that could be a head and shoulders pattern. Listen, it could be, but I don't trade head and shoulders patterns. I don't. What I do trade is, am I making a lower low or am I making a higher high? And then I'm going to go from there. So what am I looking at? Lower highs and lower lows. The last couple of days, 68.50 has been a support zone, and the resistance, 70.30. 70.30 is still going to be resistance today. If we break above it and pull back and then hold it, we've got to move up to 72. I doubt it. I doubt it. I think we are headed down into potentially 66. Potentially 66. Okay? There's nothing else we can say there. Sell at the bounce into 70.30. Keep your stop about 20, 25 cents wide. take your first profit at 68.70 and then let a runner go into 67.30. Gold, great pullback. Just the beginning. I think this one does come in to our 27.90 area. So bounces are sell zones. We're above the 50, so you might go, Anne-Marie, how could bounces be sell zones right here? Well, we're underneath this pretty important moving average. And the bounces into that area also sit at prior support that is now looking like resistance. So, is it going to rotate through? I think so. Shorting action, bounces are sell zones. So let's have a peek and see where the, ooh, not a lot of volume. Yeah, I would say if we're fortunate enough to get to 912, $2,912, that would make a great short. We're already breaking down here at 28.81. So it could be that 29.05 is the actual shorting area, 2,905 with the first target at 28.58. All right, let's take a look at SPY. Look at this. Holy smokes. This came into the 50, roundabout-ish, right? And then rejected. My thought yesterday was, hey, if we can't get above 600, there's more selling below, and holy smokes, if there wasn't. That is just crazy. So much selling. All right, great big candlestick. So what are we going to do? Let's measure it relative to that candlestick. It is a little bit bigger. 50%, 591.86. So that's also where the exponential moving average is. We have gapped up for the day, but I suspect we have another liquidation break, right? Traders try to buy it up, but they can't get it through. 589 is the prior day's closing VWAP. And so the bounce should give us a sell zone. Okay? So you look for the bounce into the sell zone. If we lose 585, next line in the sand, 582, and then where the VWAP is sitting and liquidity at 576, right? That would also be the bottom of this wide range that we're sitting in. Here's the 50, here's the 200. SPY looks better than the Qs, right? Not much better, but it does look better. All right, so let's take a peek at this one. Here we are staring down the Qs. Let's change the direction of that Fibonacci in case it heads south. Here's where the traders really want to close. They would consider themselves champions of industry if we could close the day above $521. Not sure that's going to happen, but that's going to be the goal. What is the 50% range of the prior day's candlestick? Somewhere around 509. So the bounce action into that area is very likely to give us sellers that come in at the first pass. So there might be a little bit of a rock fight here if the buyers can hang on. Otherwise, they're going to cleanly reject it and it's going to fade. Losing 499 is going to open up a test of 491. Okay, so buckle up. Going to be a very interesting day, and I'll see you all on the streams. We do have our midday Moneyball today. I'm on the Benzinga Options show. I might be on Top Step TV. They change the schedules around all the time. But I have a great session with Metastock, just talking about how to look at these big, broad markets. So I'll put the link in there, so in case anybody wants to pop in. All right, take care. I'll see you on the streams.